Did you know companies are making money from not emitting gases? Listen, today I'm going to reveal a secret that 90% of the world's population has no idea about. It's how the carbon credit market operates, a trillion-dollar game that the elite are manipulating to extract wealth from the climate crisis. Have you ever wondered why the world's largest oil and gas corporations are so enthusiastic about supporting climate change? Why are they willing to spend billions of dollars on green projects while continuing to extract fossil fuels? The truth is, they found a way to turn the climate crisis into a massive money-printing machine. And as always, ordinary people will be the ones paying the price. After watching this video, you'll understand why the carbon credit market isn't a solution to climate change, but the most sophisticated form of environmental money laundering humanity has ever witnessed. The global carbon credit market has grown from $20 billion in 2020 to nearly $1 trillion in 2023. That's 5,000% growth in just 3 years. But do you know where that money comes from? From your pocket, through taxes, environmental fees, and rising commodity prices. Imagine playing a game where you can buy the right to commit crimes. You kill someone, but as long as you pay for life credits, everything's fine. Sounds absurd? That's exactly how the carbon credit market works. Large corporations continue emitting carbon as usual, but they buy carbon credits to offset their emissions. It's like eating cake all day, but thinking you can offset it by buying weight loss credits. Behind the carbon credit market are Wall Street investment banks, massive hedge funds, and energy corporations we thought were changing. Goldman Sachs, JP Morgan, BlackRock, familiar names in every financial crisis, now appearing in the climate crisis. Coincidence? I don't think so. Governments set emission limits for businesses. Sounds good, right? But this is exactly how artificial scarcity is created, just like how central banks create monetary scarcity. When there are limits, a market naturally emerges to buy and sell these limits. And who controls this market? Those with the biggest capital. For a project to receive carbon credits, it must be verified by independent organizations. But do you know who funds these organizations? The very companies that want to buy carbon credits. That's how they create a self-verification system, like letting bank robbers work as bank security guards. A hectare of Amazon rainforest is valued at $10 in carbon credits per year. But when sold on the market, the price can reach $100. Who pockets the $90 difference? The intermediaries, trading platforms, investment funds, all controlled by the big players. Bloomberg research from 2023 shows that over 80% of carbon credit projects are phantom, meaning they have no real environmental impact. Some projects claim to plant 1 million trees, but actually only plant 100,000. Some forest protection projects protect forests that were never threatened with destruction in the first place. The same forest can be sold for carbon credits to 10 different companies. It's like selling the same house to 10 different people, but it's completely legal in the carbon credit world. Who's responsible for oversight? Nobody. The carbon credit market operates in a legal gray area where fraud is rarely punished. Nature-based solutions sound great, don't they? Planting trees, protecting forests, restoring wetlands, all good things. But what's the truth? Large corporations are buying the right to continue polluting by investing in these projects. They don't actually want to reduce emissions. They just want to buy the right to emit more. Millions of hectares of land in poor countries are experiencing carbon colonization. Western companies buy or lease farmers' land at dirt-cheap prices, then turn them into carbon projects. Farmers lose their land and livelihoods, while corporations make billions. Oxford University research shows that 90% of tree planting projects for carbon credits fail after 5 years. Trees die, forests burn, or simply nobody takes care of them. But the carbon credits have already been sold, and the money is already in investors' pockets. Theoretically, anyone can buy carbon credits. But in reality, this market is designed for those with massive capital. The minimum price for a carbon credit bundle is usually $1 million. Small investors can only participate through ETFs, and of course, they'll bear the highest risks. Carbon credit prices can increase tenfold in a month and can also drop 90% in a week. Why? Because this isn't a market based on real supply and demand, but but a market manipulated by those with the largest capital. Governments can change the rules at any time. A project that's legal today might be banned tomorrow. And guess who will know about these changes beforehand? Shell announced it will be carbon neutral by 2030. Sounds wonderful, right? But they have no plans to reduce oil production. Instead, they'll buy billions in carbon credits to offset. Meanwhile, they continue extracting and selling fossil fuels as usual. Amazon committed to carbon neutrality by 2030 through purchasing $10 billion worth of carbon credits. But they're still expanding shipping operations and building hundreds more massive warehouses. That's how they're green on paper, but still polluting in reality. Microsoft even claims they'll achieve negative emissions, absorbing more CO2 from the air than they emit. Sounds like science fiction? They're investing billions in carbon credit projects while simultaneously expanding energy-hungry data centers. Goldman Sachs made $3 billion from carbon credit trading just in 2023. JP Morgan Chase wasn't far behind with $2 billion. They create no value whatsoever, simply acting as intermediaries in buying and selling air. BlackRock manages over $50 billion in carbon credit funds. Vanguard and State Street aren't lagging behind. They charge 2 to 3% annual management fees, regardless of whether the funds are profitable. Thousands of consulting companies have sprouted up to guide businesses in buying carbon credits. They charge millions for advice on buying air. Carbon taxes and environmental fees generate hundreds of billions in new taxes annually. Governments love this because they can raise taxes without calling it tax increases. Instead of implementing difficult and expensive changes, governments can declare we're taking action simply by creating carbon credit markets. Energy corporations have spent billions lobbying for carbon credit markets. Why? Because it allows them to continue operating as before while appearing green. No market can grow 5,000% in 3 years without being a bubble. But that's exactly what's happening with carbon credits. Most carbon credit trading happens behind closed doors. Prices, quality, effectiveness, everything lacks transparency. When Wall Street rushes into any market, be careful. They don't care about the environment. They only care about profits. When you see carbon credit advertisements everywhere, that's a sign of the bubble's peak. Just like .com ads in 2000 or subprime mortgage ads in 2007. Nature Journal research shows that over the past 20 years, global emissions have continued rising despite the existence of carbon credit markets. Because carbon credits don't reduce emissions, they only transfer emissions from one place to another on paper. Millions of indigenous people and poor farmers have lost their land due to carbon credit projects. They're driven from ancestral lands to make way for green projects. The most dangerous aspect of carbon credits is that they create the illusion we're solving climate change. This reduces pressure for truly necessary actions. No matter how attractive it seems, don't invest in carbon credits. This is a typical financial bubble that will burst like all others. When companies boast about carbon neutral commitments, look at the details. Are they actually reducing emissions or just buying carbon credits? Instead of trusting carbon credits, support real solutions: renewable energy, public transportation, energy efficiency. When you see a product advertised as carbon neutral, be suspicious. The company might simply be buying carbon credits instead of actually reducing environmental impact. Like all financial bubbles, the carbon credit market will collapse. Maybe in 2026, maybe in 2027, but it will definitely happen. As always, those who suffer will be ordinary people, those who've paid higher prices for goods and services due to carbon taxes. Investment banks and hedge funds will retreat before the bubble bursts. They'll move on to the next opportunity to extract wealth from new crises. Now you understand the truth about the carbon credit market. It's not a solution to climate change, but a new form of colonization by the elite. They found a way to turn the climate crisis into a massive money-making opportunity while pushing the cost burden onto ordinary people's shoulders. Don't let them fool you with fancy terms like carbon neutral, nature-based solutions, or net zero. Behind these phrases is a system designed to make the rich richer and the poor poorer. The truth is there's no market solution to climate change. The real change is needed: Reduced consumption, lifestyle changes, investment in clean technology don't provide short-term profits for Wall Street. That's why they created carbon credits, to maintain the status quo while appearing to take action. Don't let the real climate crisis become a wealth-making opportunity for those who caused it in the first place. If you found this video helpful, please like and share to help wake up more people. Don't let them continue deceiving us with these fake green solutions, because when the carbon credit bubble bursts, those who suffer won't be the CEOs of Shell or Goldman Sachs. It'll be us, those who trusted their promises to save the planet.